gentlemen, good day and welcome to the Dr. Reddy's Q1FY2024 earnings call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. If you need assistance during the conference, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Richa Periwal from Investor Relations team. Thank you, and over to you, ma'am.
Thank you, Darwin. Thank you. A very good morning and good evening to all of you. And thank you for joining us today for the Dr. Reddy's earnings conference call for the quarter ended June 30th, 2023. Earlier during the day, we have released our results and the same is also posted on our website. This call is being recorded and the playback and transcripts shall be made available on our website soon. All the discussions and analysis of this call will be based on the IFRS consolidated financial statements. The discussion today contains certain non-GAAP financial measures. For a reconciliation of GAAP to non-GAAP measures, please refer to our press release. To discuss the business performance and outlook, we have our CEO, Mr. Erez Israeli, and our CFO, Mr. Parag Agarwal, along with the Investor Relations team. Please note, today's call is a copyrighted material of Dr. Reddy's and cannot be rebroadcasted or attributed in press or media outlets without the company's expressed written consent. Before I proceed with the call, I'd like to remind everyone that the safe harbor contained in today's press release also pertains to this conference call. Now, I hand over the call to Mr. Parag Agarwal. Over to you, Parag.
Thank you, Richa. Greetings to everyone and a warm welcome to our Q1FY2024 earnings call. We had a strong start to the year with robust sales and record profitability. I'll start today with an overview of our financials for the quarter. For this section, all the amounts are translated into US dollar at a convenience translation rate of rupees 82.06, which is the rate as of 30th June 2023. Consolidated revenues for the quarter stood at rupees 6,738 crores, that is $851 million. It grew by 29% on year-on-year basis and by 7% on a sequential quarter basis. Adjusted for brand divestment income on a rebased comparator, the underlying growth was higher at 35% on YOY basis and 12% sequentially. The growth was driven by the generics business mainly in US, emerging markets and Europe. Excluding the one-off gains from brand divestment, loss of revenue from divested portfolio and NLEM related price reduction, India business registered a high single-digit growth. Consolidated gross profit margin for this quarter has been 58.7%, an increase of 880 basis points over previous year and 150 basis points over previous quarter. The improvement in gross margin was primarily driven by favorable product mix, supply productivity savings, better manufacturing leverage, partially offset by brand divestment income during previous period. Gross margin for the global generics and PSCI were at 63.9% and 15% for the quarter respectively. The SG&A spend for the quarter is rupees 1,770 crores, which is $216 million, an increase of 14% year-on-year, while a decline of 2% quarter-on-quarter. The year-on-year increase is in line with business growth and is on account of investment in sales and marketing, digitalization and other business initiatives. SG&A cost as a percentage to sales were 26.3% and is lower by 340 basis points year-on-year and 230 basis points quarter-on-quarter due to better operating leverage. The R&D spend for the quarter is rupees 498 crores, that is $61 million, and is at 7.4% of sales. Our R&D efforts are focused towards building a healthy pipeline of new products across our markets, including biosimilar development. The EBITDA for the quarter is rupees 2,137 crores, that is $260 million, and the EBITDA margin is 31.7%. This is largely driven by gross margin expansion and productivity initiatives across the value chain. Our profit before tax for the quarter stood at rupees 1,846 crores, that is $225 million, an increase of 26% year-on-year and 39% over previous quarter. Effective tax rate has been 24% for the quarter. The effective tax rate was higher than the previous year, mainly due to changes in the company's jurisdictional mix of earnings. We expect our ETR to be in the range of 24 to 25%. Profit after tax for the quarter stood at rupees 1,403 crores, that is $171 million. Reported EPS for the quarter is rupees 84.2. Operating working capital increased by rupees 710 crores, which is $87 million, against that on March 31st, 2023, mainly due to an increase in receivables and inventory. Our capital investment stood at rupees 362 crores, which is $44 million in this quarter. The free cash flow generated before acquisition-related payout during this quarter was at rupees 674 crores, which is $82 million. Consequently, we now have a net surplus cash of rupees 4,985 crores, that is $608 million, as on June 30th, 2023. Foreign currency cash flow hedges in the form of derivatives to the US dollar are approximately $783 million, largely hedged around the range of rupees 82.7 to rupees 84.4 to the dollar, ruble 6775 million at the rate of rupees 1.02 to the ruble, and Australian dollar 3.7 million at the rate of rupees 57.9 Australian dollar maturing in the next 12 months. With this, I now request Erez to take us through the key business highlights.
Thank you, Parag, and a warm welcome to everyone participating in our earnings call today. As always, we appreciate your interest in our company. We have commenced fiscal 2024 with a robust first quarter performance. Our sales for quarter one grew 29% and EBITDA grew 20%, reflecting the strength of our portfolio and well-diversified geographical spread. Adjusted for settlement income in the current and base period and brand divestment in base period, our sales for quarter one grew 35% and our EBITDA grew 111%. We improved the drivers in our core business for sustainable growth, productivity improvements, market share gains, and new product launches. We are making considerable progress across our strategic priorities. Let me take you through some of the key highlights of the quarter. 1. Sustained strong revenue growth driven by momentum in the US and Russia markets. 2. Generate EBITDA at 32% and annualized ROCE at 39%. High cash generation leading to net cash surplus of more than $608 million at the end of the quarter after paying the consideration towards main portfolio acquisition. 4. Completion of commercial integration activities and launch of main pharma's acquired generic prescription portfolio. 5. Received approval for 4 products in China, including our partner products since April 23. 6. Embark trade generics in India and launch a dedicated trade generic division. Through this initiative, we will be increasing our participation in retail pharmaceutical markets. 7. Entered child nutrition space in India with the launch of Telehealth Kids Gummies. 8. Biologics license application for purpose biosimilar rituximab candidate BRL _RI accepted by US FDA, EMA, and MHRA for review. This is another key milestone in our global biosimilars journey. 9. Forays into fast-growing OTC wellness space in the US with the relaunch of recently acquired brand Mama, a portfolio of high-quality dietary supplements designed to support the entire motherhood journey. 10. Collaborate with Merck Cuban cost-plus drug company aimed at increasing access to essential medication for Wilson disease patients and enter into in-license agreement with Kenshi Kaizen for launch of Loratadine for private label OTC business. 11 entered into agreement with Bill and Melinda Gates Foundation to develop injectable contraception drugs for low and middle income countries in Asia and sub-Saharan Africa, including India. This initiative will strengthen our portfolio in the women's healthcare space. 12. Successfully concluded US FDA inspection of the following four facilities recently: our API site CTO1 and CTO3 in Bolaram, our formulation site QICZ Q2, and our API site CTO6 at Srikakulam. We continue to maintain a state of constant vigilance and compliance at our manufacturing sites. 13. Released our first integrated report, which weaves together the material aspects of our business and their interplay with our purpose, value, strategy, governance, performance, and outlook. 14. The Financial Times of London named us as the Asia Pacific Climate Leader of 2023. This award is to appreciate companies that have achieved the greatest reduction in their greenhouse gas emissions intensity and made further climate-related commitments. Now, let me take you through the key business highlights for the quarter. Please note that all references to the numbers in these sections are in respective local currencies. Our North America generic business recorded sales of $389 million for the quarter, with a strong year-over-year growth of 69% and a 25% increase on sequential basis. The growth was bolstered by lenalidomide sales, new product launches such as Rigadenosone, injectable cycloserines capsules, integration of main portfolio, and market share expansion in certain key existing products, which more than offset price erosion. We launched 8 new products during the quarter and expect to launch momentum to continue during FY24. Our Europe business recorded sales of $57 million this quarter, with year-on-year growth of 13%, while broadly flat sequentially. The growth is attributable to increase in base business volumes and supported by new product launches. We launched 10 new products during the quarter and expect the launch impetus to continue during the balance of the year. Our emerging market business recorded sales of 1,155 crores rupees, with a strong year-over-year growth 28% and sequential increase of 4%. We launched 27 new products during the quarter across various countries of emerging markets. Within emerging market segment, the Russia business grew by 77% on year-on-year basis and 7% on sequential basis in constant currency. The growth is driven by pickup in allergy season and further aided by lower base. Our India business recorded the sales of 1,148 crores rupees and reported the growth of 14%. Excluding revenue from brand divestment, loss of revenue from divested portfolio, and NLEM-related price reduction, India business grew in a very high single digits. India remains our priority market, and we are progressing well on our innovation model. We have signed 2 innovative deals in this quarter and expect this to be an important growth driver in the years ahead. We are creating several growth engines for India business, including ramping up growth existing portfolio, scaling up recently acquired brands, continuous improvement of field force productivity, and foraying into trade generics. Our PCI business records sales of $82 million with a year-over-year decline of 11% and sequential decline of 13%. This has been due to lower volume pickup by customers for some products during the quarter. We expect sales to improve over the next couple of quarters on the back of increasing volume pickup, launch of new products, and collaboration opportunities. Our R&D efforts are focused on developing value-accretive products, including several generic injectable biosimilars where there is a patient need. We have filed 4 NDAs in the U.S. during Q1 of FY24, and we are on track to accelerate on this balance in the year of FY24. We are improving our operation and processes to increase efficiency and overall productivity. Our strong balance sheet provides financial flexibility to support future growth, and we will continue to maintain a disciplined approach to cash management and acquisitions. I am confident we will continue to grow the growth momentum, strengthen our core business, and build a pipeline of products to shape a healthier world. And with this, I would like to open the floor for questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kunal Dhamesha from Macquarie. Please go ahead.
Hi, good evening. Thank you for the opportunity and congratulations on the good set of numbers. First on the US revenue growth, so on a sequential basis, we have seen a significant uptick as well. Would you be able to give us some, color as to which were the primary driver? Was it the acquisition? Was it the lenalidomide uptake? In order of their quantum, if you can provide, even qualitatively, would be very helpful.
Yes. So this quarter, we had several growth engines, so it's not just the lenalidomide. We grew market share in key products. This was, let's say, more than previous quarters. We saw relatively less price erosion than we normally do. We had the main acquisitions that contribute to that, and Lina. So it's a combination of all of them. Even without Lina, it was a very healthy growth in the US.
Sure. And just continuing on that, in terms of price erosion, it's across companies there is a consensus that the price erosion has reduced. But do you see that this reduced price erosion continue for some time, or is it more of a transitory phenomena, which will kind of go away?
The model hasn't changed, so in terms of price erosion, it's obviously a function of how much competition you got for your baseline on products that did not yet erode to their potential. So I believe that in our case, we probably will see something similar also in the next few quarters.
Okay. Thank you. I have more questions. I'll join back.
Thank you. Next question is from the line of Damayanti Kerai from HSBC. Please go ahead.
Hi, thank you for the opportunity. Continuing in the US business, so as you mentioned, even without Lina, the base business has grown very well for you, sequentially. Can you elaborate a bit more, whether you are seeing a lot of supply opportunities emerging in the market due to problems with some of the competitors, etc.? And do you believe these opportunities will sustain for next few quarters? That's my first question.
So it's a combination of timing of RFPs, a combination of a set of situations that happen to products in which we could supply more. Not necessarily a supply shortage, but it could be service or other supply disruption situation that happens. And also activities that we did with certain customers as well. So overall, let's say it's primarily a volume-based growth that's based on agreements that we have with customers.
And do you believe this volume-based growth opportunity will continue at least in near term?
I believe that the trends will continue, yes.
Okay. My second question is on R&D initiative. So biosimilars you mentioned. Can you talk about it in your global portfolio, which is for all the markets where you're working?
So biosimilar is global initiative for us. We are planning to be in all the markets, including the United States. with our portfolio. We are working on about 11 biosimilars as we speak, that some will be launched before 2030 and some after 2030, starting probably in the beginning of 2027. At the time, I don't want to discuss the product, but let's say that it is a very important initiative for us, and we believe that it's a place that we want to be a serious player.
Sure. And my last question is, how do you see your EBITDA margins moving up in next few years, excluding Revlimid? If you can provide some color on it.
So I'm maintaining, and for me, we've been in this discussion in the past. I'm not taking this product out or another product, because every year we have those products that contribute more to our performance. I'm still maintaining the long-term average of the 25, knowing that right now with the linadulimab we will probably be above it, but overall this is the area that I'm still maintaining, that will be very comfortable, that will allow us to fully finance all of our growth aspirations of the future. So what we are moderating now is the level of investment that we want to put. Naturally, the more we have, the more we can invest into the future, which is what we are planning to do. But let's say in the next coming quarters, as long as we have this limited volume agreement in place, likely that it will be above the threshold of 25%.
Okay. Thank you. I'll get back to the queue.
Thank you. The next question from the line of Balaji Prasad from Barclays. Please go ahead.
Hi, this is Michaela on for Balaji. Thanks for taking our questions. Can you just talk a bit more about what led to the growth seen in Russia and how sustainable this growth is? Thanks.
In Russia, we grew. Part of it is seasonal. We have most of our businesses in the retail, and we are also playing in the biosimilars. So in these specific quarters, we enjoyed the seasonality of the allergy as part of it, as well as the growth of the big brand in there. I believe that the growth momentum will be in Russia. We are expecting a good year in that respect. We are also, I think, so far hedged well on the ruble and protected it well. So in that respect, the combination of investing in our brands and enjoy the growth momentum that comes from relevant products we have, plus a good defense on the ruble, help us give these results.
There is also impact of the low base in the growth that we have reported this quarter. And as you know, by its very nature, Russian market is volatile. So there will be fluctuations from one quarter to another, but we are going ahead of the market.
Thanks so much.
Thank you. The next question is from the line of Surya Narayan Patra from Phillip Capital India Private Limited. Please go ahead.
Yeah, thanks for the opportunity and congratulations on the great set of numbers, sir. So my first question is on this latest portfolio that has been acquired. So what are the kind of size that we would have seen this quarter after that? And also if you can give some clarity about the profitability of this portfolio. I'm asking this question because it looks like exploring the Revlimid performance, your base business has seen a sequential improvement. So from that angle, I was just trying to understand the contribution to the acquired operation in the US and profitability versus the company's regular base business.
So indeed, our base business did well, even without linadulimab. We closed the deals and practically started to sell in the end of April. and we are actually launching product after product through this period of time. I believe that the main pickup will be in the next coming months when customers will open their bids and we will be able to bid more. Overall, let's say that the contribution of main will be more significant in the next quarter come than it can in this quarter.
Okay. So is it a kind of still a $100 million annualized size?
Yes, in that range.
Okay, sure. So the second question is that regards the lenalidomide. So we have almost kind of approaching to finish the first year of supply, and obviously as per the prescription trends, we see that okay, we have already kind of giving 6% kind of volume share now. So is it fair to believe this is the kind of first year number, and we should see a progressive improvement in the volume share going ahead?
So we cannot share a specific number on these products. We are in agreements in which is a volume. Sorry?
This is there in the public domain in terms of the RX volume, so that's why I am asking the question.
No, I appreciate the question, but I cannot share. I have the full knowledge of the quantities, obviously, and I cannot share that as per our agreement. But what I can say is that this kind of levels of sales of lenalidomide likely to continue and fluctuate from a quarter to quarter based on the supply, based on the orders and based on the preference of customers. But we believe that it will continue to be an important segment product until the end of the agreement, which is likely to be in January 26.
Sure. Sir, my last question is about the PSI business. We have seen sequential reduction in the revenue as well as the margins there. And you have also mentioned in your opening remarks that there is inventory rationalization trend that is ongoing. So, do you think this is a kind of quarter more kind of situation, and generally the APIs and the manufacturing supply opportunity kind of are likely to face this inventory destocking kind of trend and to have impact on the margins generally in the near term?
I think during the quarter we have a certain pickup that was related to timing of picking up the orders primarily. So I believe that it's actually relatively fast already from next quarter. So overall, I'm confident that our API business will grow this year.
Sure, sir. I have a couple more. I'll join this. Thank you. Wish you all the best.
Thank you. The next question is from the line of Neha Manpuria from Bank of America. Please go ahead.
Thanks for taking my question. My first question is on the India business. If I look at the number that we reported in fourth quarter and strip out the brand divestment, based on that, we've seen a pretty sharp increase on that base in the first quarter. Did the trade generic, I know we officially announced the launch in July, but was there any contribution at all of the trade generic business in the first quarter? Or if you could give us some color in terms of what's driving the improvement that we are seeing and how much more can this continue to, I know you talked about public initiatives, but how should we look at growth in this business from the high single digit that you pointed in your opening remarks?
Yes, thank you for that. The trade generic did not yet contribute much because we just recently launched it. And so most of the growth comes from our branded generics, our key brands that we are focusing on. These trends are likely to continue also toward the year and actually going to improve. The activity that I mentioned and we discussed in quite a few occasions on our journey for top 5, it's a combination of both the innovation as well as the investment in the portfolio that we have, including the traders. So most of the deals that we sign and going to be signed, we have actually quite a few deals that are in discussions, is to bring innovation to India. Actually, Horizon 2 that we have discussed in the past is all about to bring innovation to India, mostly in licensing in, some product acquisitions, and some potential partnership with other players. These partnerships and that will likely to have an impact from FY25, FY26 onward. FY24, which I believe we will grow significantly, will come primarily by the current branded generics focus brands that we have. Sorry for the long answer. Yeah.
Yeah, understood. Thank you so much, sir. Second, on the remarks, you also mentioned approvals in China. Now, if I look at my ROW business, excluding Russia, CIS, we are pretty much in the range that we've been doing for the last 4-5 quarters, the 400 crore range. When do we see meaningful contribution start from China, or when do we see how does the step up from this level happen in the emerging market business?
Yes, so all the EM markets are actually growing double digits. Obviously, Russia being a very big market in that space, when it's growing 77%, overshadow the others. So all of them will grow double digits, not just with Russia. As specifically for pickup in China, we are now starting to see the results. So likely that these trends of approvals will continue. Most of the value will start to see, if you call it a leap or more significant growth in FY25, but we will see already in FY24 a certain growth. But the level that we have discussed in the past of our aspiration in China, likely that we'll start to see from next year.
Understood. And my last question, Parag, in terms of our investments in the business, should we expect our absolute SG&A and R&D spend to trend up from the current spend that we are seeing for FY24? I understand this will obviously continue to increase, but is this level of investment, what that we have seen in the quarter, enough to sustain the growth that we've been without, or should I expect an increase from the current level?
Yeah, we are continuing to invest behind multiple levers, as we have been talking in digitalization, behind our brands and sales and marketing. I would expect a slightly higher trend in absolute terms. As a percentage to sales, of course, it will remain very positive because of our top-line growth. We will see the benefits of operating leverage. But in absolute terms, you will see a marginally upward trend.
Understood. That's helpful. Thank you so much, sir.
Thank you. The next question is from the line of Cinderella Carvalho from JM Financial. Please go ahead.
Yeah, thank you so much for taking my question, and congratulations on a great set of numbers. Bringing the question back to India, you mentioned about the innovative products, 2 products that you have signed for India. You mentioned about mother and child. You spoke about gummies. So if and the generic division, so what kind of investment are we envisaging in all these 3 different categories that we're talking, which is consumer health, generic business, and making the in-license products? And in what range should we see this over coming 3 years?
So we are not going to see more investment than what you see already, and like Frank just alluded, maybe a slight up. Some of it is what we call balance sheet money, meaning that we will sign a deal or acquire a product, and it will be a balance sheet move rather than P&L move. So it's relatively it's not expensive or not going to require much, and I'll try to explain why. Most of the stuff that we're bringing to India is a late-stage innovation. The product is already there. The product also proved itself in other markets. In most of the cases, it's got approval already either by the US FDA or by European authorities. So the activity that requires are either a licensing fee, some local trials, registrations, and we are mostly going to leverage our teams in India for doing that. So if you wish, it's a marginal investment that, give or take, we are already spending the last couple of quarters, and maybe it's marginally up the more deals that we will do. But I don't anticipate a major use of cash or cost in that element. It's actually pretty straightforward in that respect.
So the returns will be fairly high is what you're trying to tell with a minimal investment. But in terms of revenue, how should we see these, if we divide in the three segments, how sizable each segment could be for us, generic, innovative, license? So how big these could be? From a brand perspective, I understand you have something like 150 crore per brand size in your mind over 3 to 4 years. But what it could mean to the entire India business?
The intent is to bring a significant number of products to the Indian market in the next coming years. If everything will be successful, we are talking about tens of agreements like that, which we believe will be the main lever to bring us to top 5. So if top 5 means that we need to double ourselves, give or take, in the next coming years, that's the expectation that the innovation will bring most of that value come into play, and the rest will come from the normal growth of the brands that we will have, as well as the traded generic. So the innovation will be the key focus and the main growth drivers. In terms of timing, as we sign the deal, then of course we need to allow some time for a clinical trial, registration time, and then of course the pickup of the brands as we are introducing it to the healthcare community. So it will be kind of a pickup of a brand. So every one of these brands will take a few years before it will come to its peak sales. But the beauty about it, these are true innovation, they are not switchable, and they are bringing a real solution for places that we believe that there is no such a solution, or the solution that we are bringing is much better.
Thank you. And just one last question. We're seeing a lot of Reddy's name in terms of shortages products in US. Are you seeing some opportunities meaningfully for us over coming few quarters, or are you planning to participate in some of them which could be potentially large for us?
We do from time to time, but to be honest, I don't enjoy when we are going on the expense of others. I actually want the supply to be there for the patients. So whenever it comes, we are taking it, but I don't see it as a strategic growth lever. I'm happy to supply if it helps patients, but I actually wish that all the companies will be able to sell normally and not to see it as a little growth. But it is coming to us as well from time to time.
Thank you so much, and all the best.
Thank you. We have the next question from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Yes, thanks for the opportunity. Particularly on the trade receivables, as I see, there has been a good jump of almost 450 crores, both year-over-year or even quarter-over-quarter. Is this more or less linked to North America business? And is this more to fill up the channel and so the sales could moderate to some extent in the coming quarters?
The increase in receivables is broadly in line with the growth in business and the normal fluctuations that we see depending on the timing of supply and the credit terms. There is nothing unusual, and it's in line with the business growth.
Okay. And secondly, the overall gross margin, we used to guide for, at least in the past, before recommending the range of 50 to 55% for the base business. And since launch of Revlimid, we've seen good at least 250 to 300 bits improvement in the gross margin. So, if you could just indicate gross margin guidance for say 24.
So, yeah, see, first of all, we can't ascribe a certain portion of the gross margin to a specific product. As you know, we manage the business on a portfolio basis, and we are launching new products all the time. This quarter, again, we have launched 8 new products, and in the next 2 or 3 quarters in this year, we are going to launch more products. So we have to look at the gross margin as a composite. Overall, the drivers of gross margin, as we know, are the price erosion obviously brings it down, but we are seeing softening of solvents prices, we are seeing softening of freight rates and so on, and we are also seeing favorable product mix. Overall, I expect our gross margin to range between 56 to 59% in the next few quarters.
Interesting. And just on extending to your launch, as any other 2 products which you would like to call out, which could be interesting launches over the next 12 to 15 months in North America segment?
I don't want to call out specific. We're trying to avoid it because after that we have a lot of discussion on this product. But what we can say is that we believe that we can sustain also the level of activities in North America, even post linadulamide, because we have quite a few of very high value products that we can bring to the market.
Great. Thanks and all the best.
Thank you. We have the next question from the line of Shyam Srinivasan from Goldman Sachs. Go ahead.
Good evening, and thank you for taking my question. I'm just looking at the sales mix for the quarter, and I look at it, 47% of revenue is coming from the US currently, 13% from India. I remember we had some kind of an aspirational goal to narrow this over time, but we seem to have gone the other way. I know there is a linadulamide in there, which is probably skewing things. But there is just your broad guidelines of a more diversified geographic mix, and I'm a little also confused with India strategy because we keep divesting things, right? Like the Reddys Life Sciences or the JB Pharma. So how do we get top 5 if we keep divesting? And you mentioned innovation to kind of help you double, but I'm just wondering what are these opportunities? Shouldn't it be more like a transformative M&A where we acquire assets like a Wockhardt deal perhaps few years back, right? So that's sort of small. So just want to understand your thought process on this.
No, sure. Thank you so much for the question. Indeed, the linadulamide make the US obviously in proportion more than before. I'm reiterate our commitment to the India market, actually being a very important market for us, and also reiterate the aspiration to be top 5. Now, how should we go to be top 5? It's not because we are going to buy number 6. I wish I could, but first it's not available, it's too expensive. And I don't think our shareholder wants us to do that. The way to do that for us is by launching innovation. So we saw that in India there are two trends that are coming up. One, some of the branded generics will have a headwind in the future, either because of the trade generic, either because of the digital channels. There will be certain level of potential switches also. And when we look at our portfolio and we saw what brands we believe are long-term for us, we decided to focus on them and to divest those that we decided to not to focus on. At the same time, we have a major effort to bring a lot of innovative solutions to India. And once this will pick up, this will bring us to the desired level even without acquisitions. Acquisition I'm happy to do with a reasonable price, with a reasonable risk, but we are not building on it. We can be top 5 even without.
Got it. Helpful, Eric. My second question is on the cash pile, about 50 billion of net cash sitting now on the balance sheet. Parag, what are your top priorities in terms of capital allocation at this point of time? What is the rank out of things that you would be using the cash pile for?
So obviously we want to use it for driving business development, M&A. I think in terms of priority, I would say first of all it has to be a strategic fit. We have a clear strategy for every segment in our business, for every geography. And secondly, it must come at the right price. So we are not going to chase acquisitions just because we have cash on the balance sheet. Within these boundaries, I would say that acquisitions in India and emerging markets would probably rank higher. Having said that, if there are good opportunities that come up in US or Europe also, we will grab them. Just like the main acquisition that we did recently. I think it's a great fit. Yes, we are chasing acquisitions. I believe that instead of seeing a large acquisition, we will probably see a series of smaller acquisitions. So a string of pearls strategy. But it depends on what kind of opportunities are available at the right price.
Got it. Thank you and all the best.
Thank you. Next question is from the line of Sayon Mukherjee from Nomura. Please go ahead.
Yeah. Hi. Thanks. So if you can, talk about, what's the revenue base in China currently, and you mentioned about, the significant growth from FY25 onwards. So I understand you're getting like 10 to 15 approvals per year now. So from a 3-year perspective, with 30 products, added to your basket in China, how should we think about revenue, in China in 3 years' time? And how does per product revenue potential you see in China versus let's say in US? So I'm wondering, can it be $200, $300 million more in revenues in China? If you can give some color on, how should we think about the growth trajectory in that market?
So I see any number of around 2x in the next 3 years. So this is the time. The baseline that we are talking about, I'm talking now in market sales, not necessarily the way we report, is around $180 million a year.
Okay. So it means like additional 180 million is what you would hope, let's say 3 years down the line is a fair number to look at in China.
It's in this range, could be even more.
Understood. Okay. And my second question would be around R&D. I think you mentioned run rate of around 500 crores a quarter, right? Is it possible for you to sort of indicate, how is this, like how much of this is going into biosimilar development at this point? And secondly, at the time of Analyst Day, you talked about new Horizon 2 initiatives having an impact of 1,500 basis points on your EBITDA margin. That's the kind of investment you are doing. So what's the number at this point in time, if you have anything to share on that?
Yeah. So Sayan, on the second question, right now we are in this range, so 50 to 100 basis points on an annual basis is what we are investing behind Horizon 2. And of course, going forward, depending on how many of these succeed, it might start inching up. But we'll obviously, discuss that subsequently in the subsequent calls. Your first question was regarding, just remind me.
R&D.
So right now our R&D behind biosimilars would be approximately 20% of the total, and we expect it to progressively go up because we are investing behind biosimilars. Some of the products that we've said in the past, Tosti and tocilizumab, Avataset, and so on, we expect it to progressively go up.
Okay. And this 50 to 100 basis points you mentioned does not include, or does it include the biosimilar investment? Do you consider it as part of Horizon 2 or is it like separate?
No, so this 50 to 100 basis points does not include the R&D investment in biosimilars.
Okay. Thank you.
Thank you. The next question is from the line of Vinopati Parampil from Elara Capital. Please go ahead.
Hi, good evening, and congrats on a great set of numbers. Just a couple of questions. One on Regadenoson. Could you please help us understand the competitive landscape there? I know a couple of you guys have launched. There are more approvals. How many competitors are there in the market right now?
So for Regadenoson, it's a multi-player product, right? We've launched it in April, and we've seen good progression in terms of our market share. We are happy with the way things are progressing for us.
Okay. And any update on your products which you have out-licensed, that is Pegfilgrastim and the novel product E7777? Any updates regarding timelines?
So on the first one, it was already launched, and so whatever is the considerations will come, of course, with the progression of the sale of this product. And up for E7, likely that in the next quarter or the third quarter, depends, it will be December, January, we should expect to see whether it will get approval or not.
Okay. And any milestones or any royalties included in the current quarter from the first product?
No.
Sorry?
It's a low single-digit number in absolute terms.
Oh,
it's not material. It's not material.
I meant not material.
Okay. And finally, on generic rituximab, now that FDA has accepted your filing, what sort of timeline can we look forward to if everything goes fine? Would you be looking forward to launching it in 12 months, 18 months, or something like that?
Yes, this is the timeline. So somewhere between 12 months to 18 months depends, of course, on the approval by the US FDA. Once it is getting approved, we will launch it. Now it depends if response letter will come or anything like that. But likely in that answer.
Thank you.
Thank you. We have the next question from the line of Ankush Mahajan from Axis Securities. Please go ahead.
Thank you, sir, for providing me the opportunity and congrats for good numbers. Sir, this is an extension of the question that our base business is improving, and it seems from the number that the base business in the US market that has improved a lot. Can we say, sir, a high single-digit growth Q1 in the base business? And I would really appreciate if you tell us that what are the factors behind that the base business is improving. What is happening in the US market, sir, at this time in the generic?
So I mentioned part of it is timing of RFPs, agreement with customers, shortage of some products, and relatively lower than normal price erosion on the base. So it's a combination of all of it.
And can we expect this trend will continue?
Should, yes.
This quarter, sir, there's a high single-digit growth Q1Q on base business.
I would just say that it is healthy growth, even after excluding Lina as well as Main, it is healthy growth.
Thank you, sir. Thank you very much.
Thank you. The next question is from the line of Kunal Dhamesha from Macquarie. Please go ahead.
Hi, thank you for the opportunity again. So just coming back to the in-licensing opportunities for the India market or the innovation that you have talked about, how does those opportunity fit into our 25% framework for EBITDA margin and ROC? Are they accretive, neutral, or would you say dilutive?
That's absolutely part of it. So we should reach those margins with the investment. It means it's including. That's why right now we have that, and we have even higher margins than that. And I use the 25 always as kind of benchmark of where is our comfort zone. It doesn't mean that we necessarily get it quarter on quarter. Likely that in the next couple of quarters it will be higher than that, including that investment. And likely that the 25 anyway needs to include all of that as well. So it will not be below that 25%.
Sure. And secondly, on the region.
Just to clarify, 25% EBITDA obviously is for the entire portfolio and across all geographies. There are business segments which will be higher, and there are business segments that will be lower than that. 25% is our overall aspiration, and that model includes certain part of portfolio which will be in line.
Sure. Perfect. And secondly, on the trade generics business, can you provide some details as to, we have launched this division, how many people have we kind of, hired for this, how many products that we are expected to launch, let's say, over the next 2 to 3 years, and which are the geographies that we are targeting or any particular therapy areas that we are targeting for this business?
So we are not participating in about 50% of the Indian market. So, when you look at our portfolio today, there are certain therapies and segments that we are not participating, which is about half of the market. So we are targeting, obviously, a place in which we believe there is a meaningful play in those areas that we are not participating. We will launch it all over India. So geography-wise, it will be in all the states of India. In terms of number of products, it will be, I don't have the exact number, but it's few tens of products that will be launched in that direction. As for the pickup and stuff, we probably need to see the response of the customers to that. At the moment, we cannot tell. We probably need to wait a quarter or two.
Sure. Thank you and all the best.
Thank you. That was our last question, ladies and gentlemen. I now hand the conference over to Ms. Rita Periwal for closing comments. Over to you, ma'am.
Thank you all for joining us for today's evening call. In case of any further queries, please get in touch with the investor relations team. Thank you so much.
Thank you. On behalf of Dr. Reddys Laboratories Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.